The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruit Stock Club. Man, buttons don't want to work today. Excellent. Man, I hope everybody's having a good week, man. I'm back again, back in the chair again, going live like I do every week, Wednesday at 10 o'clock. And put the little bell on. So today, just get into it. I have a few topics I'm going to discuss today. Man, we're going to go over charts, right? We're going to discuss market behavior, right? We're going to discuss the Federal Reserve decision today. And then I'm going to give you some of the top stocks, the top performing stocks of the last week. So let's get to it. So look, always ask, please like, subscribe, and share my show. It's important. Trying to get my message out there. And so I appreciate if you can like, subscribe, and share. Disclaimer, the information provided in the First Fruit Stock Club podcast is for educational and informational purposes only and should not be considered investment, tax, legal advice. The views expressed by the host and the guests are of their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk, including the potential of loss. Past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial professional before making any investment decisions. First Fruit Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. So, and the weather, just a quick minute about the weather has been crazy. I mean, especially last week, one minute, we're in short sleeves and it's like 84 degrees and it's snowing the next day. It's crazy. And I guess that's maybe a testament of how this year has been. Things have just been crazy, right? Not in order at all. And but we know we have to learn how to operate in seasons like this, right? And this is one of those seasons. All right. So look, let's get into the market. Total market, man. Market got hammered today, down 700. Dow Jones Industrial Average down 768 points. S&P 500, 91 points, and the NASDAQ down 327 points. So, the Dow Jones Industrial Average. So, as I often state, when I'm, when I review the charts, is that, man, the market, it is positive 1 second, and then the next second it can move negative. And, the war has been weighing on this market, right? The war has been weighing on the market. And you see that we're going back 6 months and 3 months, 6 months. And we're headed towards a 6-month low, right? We're headed towards that. And the question is, will we stop there? And it's a lot going on, especially with the president and the meeting of the Federal Reserve. I'm going to get into that, but it's important that we take heed to that. So look, also S&P 500 once again is on its way down, right? 6 months, November low. That's where we are. So the question is, are we going to bounce from here or are we going to continue going? And then the NASDAQ, right? Man, we hit that same low in March of 22,078. And we're not too far from there. We're at 22,152. We're not too far. And let's look at the volume. The NASDAQ volume is a billion shares traded down from the average volume. The S&P 500 is like 250 billion down and shares, and the Dow Jones is about 100 million shares down. So the market has been trading pretty light, and that's, people have been nervous about trading in the market just because all the different things that are currently going on, right, with the war and oil. And, oil is up and down. Today's oil has been reached, another milestone of $110, right? So it's really concerning to the market, and oil affects everything. So oil, and I'll discuss that when I get into the Federal Reserve and their commentary, Jerome Powell, his commentary about what he's concerned about, which is inflation. But first, I want you to know that, the stock market is not just about numbers and charts, right? Every week I come in here and I get into numbers and charts. The stock market is about behavior, right? So today we're going to discuss behavior and how behavior affects markets. All right. So look, the first behavior we're going to discuss is the behavior of a goal-oriented market, right? And when we look at investing, the overall goal of investing is to make money. All right. Point plain simple, to make money. Right. And what happens is that is usually the first stage where everybody says, okay, I want to get into the market. I want to invest. And everybody has this, you want your 401k to grow. You want your brokerage account to grow. We all want extra money, right? We need extra money because the cost of things continue to go up, but we all want extra money. And this creates a behavior of people having a goal of, when they invest, wanting to earn more money. So then the market moves on to the next stage, right? So the message has been sent out that, hey, look, the market is viable right now for an increase in value. Okay. So everyone starts communicating, hey, the market is on fire. Like, for example, AI, right? And you can look at AI, and AI went through this entire process, right? So you can say, hey, look, everyone starts communicating about the benefits of AI and how AI is going to change everything. And you see this is going on. I mean, that's all that's online. It's on social media. AI. The tremendous amounts that's been invested in the market in the AI. This is part of the communication, and this positive communication saying that AI is going to change the world, and therefore these companies have to invest in AI. And I agree with them, right? I agree. And this is the communication that's going out. People will continue to say, got to put my money in AI. Some of the largest companies in the world, from Meta to Microsoft investing in OpenAI. AI, got to invest in AI. Got to invest in AI. So you have all these things, and the goal, of course, is we want us, if everyone's investing in AI, then the market should increase in value, and my stocks should increase in value. All right, so that's that stage. So then it moves on to the stage where everybody says, look, man, this AI message is serious, right? And it gets into the public, right? It gets to the public, and everybody's saying, look, AI is really a thing. And man, look at the stock market. The stock market is moving, it's booming right now. I got to get on this AI thing. I got to get on this .com thing. I got to get on whatever the next thing is. People start to buy into the market, and people start to say, hey, I got to get in on this AI thing. And it becomes a craze. Like, people start to get into this, and start to put their money and start to invest and try to figure out, how do I get a part of this AI thing, this theme of AI, right? And then it comes to the last part. Well, is this AI thing really a thing, right? Is it really going to be a thing? I mean, it's compared to other evaluations in the market, it may be overvalued right now, right? So we have a market where people are trying to value things, and people, and this is a current thing that's going on. People are trying to value AI. How will companies? Will it really do? Will it really meet the expectations that everybody has for it? And will it generate revenue to match the investment of AI? Right? Will it generate revenue and match the investment of AI? All right. And this continues to go on. So the beginning of this process, the beginning, everybody was like, yes. All the answers were yes. Everything is perfect. Everything, yes, we have to do it. So, but then what happens is well, the evaluation comes back and say, hey, after a little things get stretched, is it really worth it? Like, will companies really make money? All right. Are they really going to make money off of this AI thing? So then the valuation, the settlement of the valuation goes to the goal, goes back to the goal and say, look, I think things are overvalued, and I think you overvalued this AI thing. Perception, right? And look, you may want to dial back some of them. So the goal is to make money. So when they go back to the goal and say, well, I need to preserve and make this money. So I'm going to sell some of these things that I think that may be overvalued. I'm going to sell some of these things. And it becomes a behavior. It starts to become a contagion, and people start to sell, right? They go back, right? And then that negative information is now communicated through the market. And now the market becomes nervous and scared and say, hey, look, I have to, man, we got to sell, right? The market isn't positive because communication creates the negative or positive environment. Communication has now created the negative environment in the market. And if you look at right now, the communication that we have is oil prices will damage the economy and push us into recession. That's the communication that's going on with the market, right? And it's a true statement, right? It's a true statement because oil affects everything. It's in everything, all products, food, transportation. We all need oil, which is, turn into gasoline. It affects every aspect of the economy, and it also affects inflation because the price of oil, right? Because you have to pay more for it, then all the prices of everything goes up, right? The price of everything goes up. Then people get nervous. People start to sell off. Where we are now, people are starting to sell off, and we just hit, as I showed in the charts, we just hit some very, very negative milestones in the market in regards to where we sold off today, right? It's not a good place to be. Now, hopefully tomorrow we bounce, but I think the market could go down another 5 to 10%, right? We'll see. I'm not sure. Myself and the club, I'm watching that, and we're preparing for that. Are you prepared? Have you prepared your portfolio? Do you have a strategy going on moving forward? So all these things combine, and they create a behavior aspect in the market. And the behavior is really the strongest aspect, because we can look at numbers all day. And what happens, numbers can mean anything if people are buying into it, and they're going to take the stock price to the stratosphere, right? Or they're not buying into it, and they sell off on fear, and it goes way past where the valuation should be, and therefore you get a deal. So that's where we are now. There's some deals in the stock market, right? And there's some opportunities. What we don't know is totally how the war and the price of oil, which keeps going up, right? And the Strait of Hormuz, I hope I pronounced that right. I butcher it every time. Will that ever open? Right? Will they ever come to an agreement? We don't know. We don't know where this thing will end. So therefore, we have to adjust and prepare our portfolios and prepare for the negative communication that's going to be coming out, that you're going to hear, and the reevaluation of your portfolio or the stocks in your portfolio. Because if we look at it, the stocks have gone back to the prices you purchased them at 6 months ago. Will we go back a year? Will we go back further than that? And the problem is, the issue is that this is a great time to buy great companies, but you have to have a strategy. I'm not going to tell you just to go buy blindly and go and, you have to, dollar cost averaging is a good strategy, or just finding strategic points and buying stocks in regards to the percentages that they're down, right? Finding areas to buy, finding a strategy to put your portfolio in. So you're always active in looking at your portfolio, and and looking at parts to add to the portfolio, because what's going to happen is everything is going to clean up, right? They're going to come to an agreement, and the price of oils, they're going to open up back the Strait of Hormuz, and it's going to reopen, and oil is going to come back and flow around, and the price of oil is going to crash. Right? But you don't know, and I don't know when that point is going to be. And nobody knows, right? And how high will this take gas prices? I mean, what are we going to be paying? $6? I know some people are paying $5 right now. I think here, we started under $2, like $2.80, and now we're like close to $4. I think $3.80. So where will gas prices be? And like I said, that is just the beginning of it, because gas affects everything, affects the prices of everything. And so if we have inflation, that brings me to the next point. And we're going to go here, is that the Federal Reserve met today and had a decision, right? Decision was, key takeaways: the Fed held interest rates steady, no hike, no cut. Stand still, cautious, and data dependent. They're not ready to declare victory on inflation yet. Inflation progress has been made, but it's still above target, 2%. So they're staying patient. The economy remains resilient, strong labor market, steady growth. The future outlook is that the Fed signaled that rate cuts are still on the table for later than 2026, but not immediately. Now everyone thought that the rate cuts were going to come earlier. But I've been watching CNBC, and people are saying rate hike, right? With this, with the cost of oil, right, increasing and taking the inflation up higher and higher, with the increased cost of gas. And we just like I said, we've just seen the beginning aspects of this. Like, this thing hasn't played through yet. It is going to play through, continue to move through the economy. This is just the beginning aspects. All right. So as the logistics and the products and supplies and begin to move around the economy, companies will start getting feedback about the increase in prices to move their goods and services, and they will start raising prices accordingly. And once they're doing that, right, will the Fed say, hey, you know what, this inflation thing is back. We've been at it, but this war and increase in prices in oil has really affected. We may need to hike interest rates. And if we hike interest rates, that is a big problem. That becomes a real revaluation standpoint the market will reevaluate very quickly. Okay. So, but we don't know. So, like, we're in the cars and getting all of this, right? All of this, and the reason why I'm saying this is that when Powell came and discussed, it says the goal. If you look at and getting back to the subject of the goal, communication, buy-in, and evaluation, the Fed is trying. The goal is the Fed is trying to control inflation without killing growth, right? So raising interest rates would really be one of the last things they would want to do because that would kill growth. All right, because people can't refinance and be less money, less liquidity in the market. The message, they decide to hold steady. So we're in a wait and see. So we really don't know. And the market just kind of sold off today, right? Markets are cautious. Like I said, not fully bullish yet, kind of bearish, but not fully bearish yet, right? We're still close to all-time highs. And this creates selective opportunities, but not broad rallies. So there will be some selective opportunities, but there won't be a lot of broad rallies. So this is a stock picker's market, all right? So in saying that we just have to kind of prepare ourselves. And this is the reason why I developed a portfolio, because even while the markets are doing bad, you can still receive income. Like you shouldn't have to wait for there's a good market to gain money in your portfolio. You should still have income coming in your portfolio. And yes, when stock prices go down a little bit, it does change the amount you may receive in a dividend, right? But that's okay. But you're still receiving income. And what happens is with that income, now you can take take that income, set it aside, maybe pay for some expenses that you have because things have gotten a lot more expensive, but also set aside and wait for the great opportunity that this market is giving you right now and will continue to give in the future, because we don't know how far it will go down. But like I said, we hit a new milestone today, so we have to watch. We have to watch out. All right, but it could be nothing. The market could bounce back tomorrow. We could get a tweet tomorrow that changes everything. We don't know. You don't know. But even when the market is going down like that, you have to continuously. I like to continuously buy small, very small, 1 share, 2 share, 3 shares, whatever, a small percentage of your portfolio, right? And this is the part, right? This is the hard part. It's like investing when everything looks bad, but because most people want to buy high, they want to buy for $1 and sell at 50 cents, and selling at 50 cents meaning that soon as some fear or some oil issue comes in the market, you're ready to sell. And that's the opportune, that's the perfect time to buy small amounts. But it takes a still heart, to go into the market when everything is wrong and buy. But that's what you have to do. And you need support to do that. I'm always here to support, and I'm always here to invite people to join the First Fruits Stock Club. Excuse me. We're here. We have a strategy. We meet tomorrow, and we have a strategy that will help you navigate these markets. Markets are rocky. Help you navigate these markets. And the most important thing is that we're still earning income in these crazy markets. Right? We're still earning income, right? And then when the opportunity times for us to put in some trades, to put in some options, right? And we're also adding to our long-term portfolio. But when the markets turn, we're in position for that also. Are you in position for when the markets turn? Do you have a strategy? All right. If you don't, come check us out. Look, I appreciate guys giving me a few moments of your time. Man, we got a lot going on in the markets, but man, it's always, always a good opportunity to invest. I just want you, and I put a post on, I got a real high engagement. It was like, think about all the things you bought last week, subscriptions, everything you paid for, right? How many of those things will give you money back? Like once you spend money on those things, that money is gone, right? You spend money on those things that you'll never see those dollars again. They're absolutely gone. But if you decide to invest in a portfolio first, and then your portfolio can give you yield as well as, options, and you can have some gains in your portfolio, and you can take those gains and then buy those things. And guess what? Your portfolio will still be here while that money that you spent initially is gone. So, man, investing, it will change your life. And stop believing that you can't do it, right? Stop believing that it takes a lot of money. It's not true, right? This is a great time, to start a portfolio. And a few years from now, you will be happy. Man, I'm glad I made that decision. But, it's up to you. You have to make the decision, right? You have to change your relationship with money, right? And investing helps you do that. All right. And you don't have to do it by yourself. All right. So, man, another fantastic show. We have a lot going on in the economy and the world, but man, everything breeds opportunity, right? So until next time, I ask you to continue to bear fruit. I wish you fruitful in everything you do. Until next time. Bye-bye.
The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like